Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, September 18th, 2020. As always, please hit the like button, subscribe to this channel, and share this video with others. Your likes and your shares is what keeps me going, so please continue doing it. Thank you so much. We're looking at stocks which are kind of coming down from the highs. I think more downside is likely. We'll see if S&P will continue towards a level that I'll show you in the in the video, so stay tuned. Tech-heavy sectors are leading the decline. We'll look at Apple and see if it's a good deal or not. Junk bonds are really not doing much, and Treasuries also not doing much. I actually have a position in Treasuries, so we'll see if it goes my way. Dollar does seem that it wants to go lower, so this is helping various precious metals, commodities such as copper and their miners. And we'll look at cryptos, and I think maybe we're done with this collapse, well, short-term collapse, I guess. All right, so first I'm gonna introduce the techniques that I use. So this is a presentation from MasterChartsTrading.com. You can also go to everyonecantrade.com. I use my own proprietary trading indicators, and you can see them on this chart. They're the green, blue, red, and the yellow lines. These are excellent what's called support and resistance lines, and I will show you that they're quite sensitive and quite useful to trade. So you can sign up at MasterChartsTrading.com. Trading indicators are now available for TradingView.com. You do not need a paid TradingView account to get my indicators. Okay, so S&P 500, this is ES1 exclamation point, also known as S&P 500 E-mini futures. So on this chart, the prominent feature, of course, is the breakout. The breakout occurred on 29th of April. This is when I started buying. I went ahead and I bought into my retirement portfolio. So I went ahead and I bought back here. I allocated up to 75% stocks and 10% junk bonds. So I had basically 80%, because junk bonds are basically stocks. But okay, let's go. I had 70% stocks and I had 10% junk bonds. So that's about 80% high risk assets. I had about 20% cash here. We went to all-time highs and we pulled back. So where did we pull back? We pulled back to this green line, and this green line is what I call support and resistance lines. So I have a profit. So this is a great place to take profits. I went ahead and I sold half. So in other words, I reallocated only 35% to stocks and 5% to bonds, junk bonds rather. And the rest are cash. So I have 60% cash currently. And if we get to the blue line and close below it, I will go to 0% stocks. However, if we get to the blue line, it would also mean a good buying opportunity. It's just that if it closes below the blue line, I don't know if it's going to continue lower or is it going to continue higher. But since I have a trade open, I do not want to have a negative trade. So in this case, I already have profits and I already sold half of my position. So if we get to the blue line and we close below it, I will completely close this trade. And then I will wait patiently for when the close above the blue line will occur again. So these lines, they are calculated by mathematical formula. They're not, just drawn by hand. I can turn them off and on, for example. The formula itself is hidden, but I can share these indicators with you so you can have them on your chart. Extremely useful, highly recommended. So here we're waiting basically to see which way we're gonna go. I mean, this is a new low for the move. So from the highs on September 2nd till today on 18th of September, we're seeing now a new low for the move. Again, we don't know where it's going to continue, but a very reasonable place for it to continue would be to about 3,000, level 3,000. So let's see what happens. Now the NASDAQ, I think, is even under stronger pressure. So it's down, 12%, maybe 13% even. Reading price action, reading candlestick charts also sometimes helps. So this is NASDAQ. I mean, look at this move from the 13th of April until 2nd of September. I mean, this is a 43% move. So it's definitely entitled to a pullback. And notice that before, up till now, the pullbacks were basically bought. So we see a breakout here above the green line. You can see a green line, nice trailing stop for you there. And now a pullback, and then it was bought immediately. Again, new records, and then a pullback here on 24th of July, which was also bought. Now, I kept telling my subscribers, and I think if you listen to my previous videos, I mean, this ramp up here from 12th of August into 2nd of September, it was just way overdone. And I kept telling my subscribers same thing, I would take profits. So now we have here a top-end looking candle. This is I believe this is a hangman, if I'm not mistaken, because this is a hammer at the top, but I could be wrong, but so double check me. Notice that here on the 4th of September, we did not bottom, and before, when we touched the green line, touched the support resistance, for example, here at 24th of July, etc., I just showed, we rallied immediately. But here on the 4th of September, we did not rally. We closed below the green line and continued below it. So if I'm gonna zoom in on this price action, it's very interesting, I think. So notice this green line is acting as resistance because the price was not able to close above it. You can see several touches from below. There was one right there on the 9th of September. There was an attempt to close above on the 10th of September. Another touch 15th and another touch 16th. So 4 times it touched and then finally bumped off of it. So let's wait and see what happens. This is NASDAQ 100, largest technology stocks, etc. So it makes sense after a 48% move to have a little bit of a pullback. If we get to the blue line currently at 251, I think it could be a buying opportunity, but we need to see what's called a bottoming pattern, and I do not see a bottoming pattern just yet. Let's look at Dow Jones. So Dow Jones, people pay attention to Dow Jones, which is fine. It's not the greatest measure of the market. I think S&P 500 is much better, but Dow Jones is pretty good as well. So, and also we have data going basically forever to like 1900s, early 1900s. On this chart, what we can see is basically the same thing. So we have record highs, or almost record highs. We didn't get to record highs. So, like I said, S&P 500, I think it's a much better measure, but it's still a move towards the highs, and you can see up arrows here in May and June, which were actual alerts to be buying it. So right this instant, I would probably exit half. If I had a position, I would just sell half right now. So Dow Jones dropped about 1,600 points, and I think it could easily drop another 2,000 or so points, and still would be a wonderful buying opportunity. So let's wait and see for the bottoming pattern again. So within the NASDAQ, for example, within the technologies universe of stocks, there is XLK, which is technology stocks, large cap technology stocks. Overall, very similar to QQQ, as I just showed us to the NASDAQ. I'm going to zoom in again on the price action here. Notice very similar to NASDAQ to QQQ, was not able to close above the green line. So right now, I'm thinking we're going to continue lower for a few more percentage points, maybe towards the blue line. So about 6-7% more. XLC, which is a also a technology sector. It's just different technology companies. They used to be, everything was in XLK, and then they separated it out, which is fine. But overall, I'm going to zoom in again on the action here. So XLC companies like Google are in here, if I'm not mistaken. You know, even though it closed above the green line right there on 15th of September, still the overall market is pulling it lower. So the correlations between various stock funds especially is very high. So we'll most likely will see a general pullback. And here's Apple. So Apple is down. Well, first of all, Apple is up. Apple is up from the actual alert right there where I'm hovering on 8th of April. Apple is up 100%. And this is already with a split. And some people don't get the splits. It says 4-to-1, and 4-to-1 implies that they cut the price as well. So you get more stocks. But the price overall, you did not change the amount of dollars you have based on your position in Apple. So right this instant, notice where I'm hovering, Apple is at a very good support resistance level. So I mean, it's not a bad setup. It's just feels like I don't think it's done yet. After such a huge advance, I think we may need to see at least sideways action because it's still, I would think it's still kind of overbought, quote unquote overbought. So this is a misleading term, overbought, but on this chart, I mean, it's kind of obvious. You can see that it was just doing nothing but going up. So it does make sense for a pullback, and I don't think this pullback is done yet. So let's wait and see what happens. Okay, here's the junk bonds. I already mentioned that I sold half because I have in my retirement portfolio. So I have junk bonds in my retirement portfolios. So I sold half of the junk bonds once again because they correlate highly with stocks, and I think stocks could continue lower. So I can always buy them back. It's not a big deal. What I do not want to do is I do not want to have a losing transaction. And right now it's a winning transaction, so I'm going to keep it that way. So here's Treasuries TLT, and it's kind of trading sideways, not really doing much. Actually, I bought Treasuries here at 163.23. This is TLT Treasuries, long-dated Treasuries. I bought it. Let's see what happens. I mean, this is a good-looking, I think, chart. Opportunity to buy at the blue line. So right now, let's wait and see. But what I was trying to say here, I apologize for the noise. Treasuries are not really showing too much fear. So for the fear to manifest, we can see like a big spike, something like what happened back in January into March. So this was huge fear, and it went to all-time highs. Now I'm not. I mean, it's possible it's gonna go something like this as well, but you know, it's really impossible to say how much the gain will be from each particular trade. So for now, what I'm seeing is a bullish security. In other words, it's a security in an uptrend, so I want to be buying it. I do not want to be shorting it. And here's the dollar index, DXY. I think it is responsible for very large movements in various asset classes. For example, in precious metals and copper, which I'll get to in a second. So right this instant, I'm showing resistance. I'm looking at it as I'm going to zoom in so that you see it as well. So the yellow line currently acts as resistance, and you can see it touched this resistance yesterday. So this candle here from yesterday, from the 17th of September 2020, it doesn't look good at all for this security. So I think we could easily see new 52-week lows. I personally would not want to short here, but this is what I would call aggressives. So aggressive shorts really want to short it here. I'm more conservative, so I want to be short. If I'm going to be shorting, I'm going to be shorting at the red line. So as in, for example, right there where I just showed in June and in early June. So this drop in the dollar is definitely helping certain securities, for example, copper. So here's copper. at 52-week highs, and then it's really difficult to trade in United States, but there are in outside of the United States there are what's called CFDs, or contracts for difference, and they are available and they are easier to trade, I think. So unfortunately, in the United States we're kind of stuck with futures, and to have futures account is complicated, but if you have a futures account, then this is just a home run trade. This is a 22% increase, and these are actual alerts here from the June. So right now we are seeing copper at new records, 52-week highs. This is, I think, pretty good for the general stock market, because it's showing the demand for copper is increasing, and if copper is getting more expensive, most likely it's being used somewhere. So for example, in building houses, because that's where copper is used quite a bit for piping. Copper miners are also benefiting quite nicely. So COPX is a copper miners ETF in the United States here. Beautiful move, 34% move, and look at this breakout. So once again, this is such a simple method that I'm trying to teach you guys. Back, for example, here in February of this year, it was a clear no-brainer avoid, and we avoided it by closing any positions we had. We didn't have any positions, but if I send this to my subscribers, and then we just did nothing until in this case June, and then there's that breakout. It's pretty straightforward, and you can't really miss it, because like before the price was below the blue line, and now all of a sudden the price is above the blue line. So you just buy it there. That's all. It's that simple. You don't need to make things up. You don't need to worry about any kind of fundamentals, etc. This works well over 70% of the time. So it's great. And here we go. We have new records for 52-week highs, probably. Well, yeah, 52-week highs. So congratulations. That's all I can say. If you opened. So gold, here's XAU USD, or gold, paper gold. So huge move for gold. You can see a breakout 23rd of March. Before that, it was like a while back actually. The breakout, yeah, there it is. It was back in January 2019. So several opportunities to trade it since then, and the biggest, or rather the latest one, was at 33% gain. So very nice. Again, does look a little bit still overbought. So ideally we should see a drop for gold towards 1838, which is a blue line, and then bottoming pattern and a new rally. But the way dollar is acting, it's possible it just continue higher from here. Yeah. And here's XAG USD, which is silver, and it sure looks like it wants to go higher, but it's a little bit overbought still. So this is the reason why I'm kind of reluctant still a little bit to get into gold trades. But before, I mean, look at this move. This was a no-brainer before. So before, here in March, and then in May, we went ahead and we opened the position here. It was a sweet move. Look at this, 81% move in our favor. And here's one stock that I wanted to highlight. So I do trade gold-related stocks. In this case, this is called Kinross Gold. It's a gold miner. There's the actual alert. I bought calls here, but I closed them somewhere in the vicinity of May of this year. And notice again that it is much better to hold the security for longer than to sell it short. Sell quickly. So in this case, 105% move for Kinross Gold. And again, straightforward, no-brainer trades. You can see them clearly on your chart. And finally, wrapping up, here's Bitcoin. So I'm going to zoom in on Bitcoin action. So we can see that we're touching the green line from below after breaking below it. There's a break on the 3rd of September, and now we're touching it again. So let's see if the resistance will hold. If it holds here, then, well, then we can see a drop towards the blue line. Hasn't happened yet, but if this resistance doesn't hold, we can easily see new highs. I mean, this is a bullish security, clearly. So I got stopped out, but overall, this is clearly a bullish security, which was up 43% just a few days ago, basically. So cryptos looks like might be done. Maybe if the dollar weakens, even more, then cryptos could just continue higher, because the way they move is kind of wild. And finally, Ethereum. So the same thing here, 124% gain on Ethereum. Again, very straightforward. 3 alerts. So if you missed first, you got 2 more. Yeah, if you got in, congratulations. This was just enormous move. So right now we're waiting again. I mean, opportunity was right there on the 6th of September. I don't remember sending the alert, because cryptos are more for a little bit more advanced traders, I guess. All right, so that's it for this week's recap. Please head over to MasterChartsTrading.com, click on products, and sign up for one of the plans. So we have a new addition, which is awesome. It's called a stock screener. And stock screener is, it basically looks for stocks which are doing this. They're breaking out above the green line. So, in this case, like for example, here's copper miners, or here's gold, or the KGC, there's the Kinross gold. So this is the kind of alerts I'm looking for, like where I'm hovering. The 3rd of September, close above the blue line. That's all I need, really. At this point, I was just buying, and then, hopefully we'll get to 100%. So this is a new thing. It is included in your newsletter, as a separate subscription, but it's free. It's included in your newsletter. So again, congratulations. You can now get another nice product, basically. If you want the indicators, these are the trading indicators for TradingView. And for TradingView, you don't need a paid TradingView account. I have a paid TradingView account. This is TradingView interface. But you don't need to. I apologize, it said Yahoo for some reason. But you don't really need to have a paid interface. You can have my indicators on your chart at the price for the free account on TradingView. So sign up, and then I'll open the door for you. You can trade on your own. And of course, Ultimate Package is one of the better deals, because right now we have 2 products which are $30, and we have another one which is, and we have a product that includes both of them, which is at $50, $49.95. So I think I would obviously sign up for the Ultimate Package. It makes more sense because you get more stuff at a better price break. All right, that's it for this week's recap. Again, if you have any questions, please let me know. Thanks for watching. Have another great trading week. Bye-bye.